All righty, folks. Let me get my microphone set up here. Hey, just wanted to take a little bit of a break today from what's going on, the seriousness of the market. I mean, let's be honest, folks. It's been brutal out there for a while. I haven't even looked at the market in a couple hours. I'm just going to take a quick look here to see how much of a beating we're all taking today. We started off with futures looking pretty good this morning. I had to do a few things market related. And now the market's up a little bit, but we did take quite a beating yesterday. I would say that up 1.79%. We're basically kind of flat. The big news here, of course, is going to be the halt in Sofi trading. And and the giant mother of all crashes in Upstart and a couple of other anomalies that are going on right now. We've reached a point of basic market irrationality. And I think it's pretty interesting what's going on right now. I would say that more than an opportunity for panic here, we're looking at opportunities to buy if you're a long-term investor. I realized at this point that is kind of a tired meme that I'm talking about right now. And speaking of memes, we're going to actually take a look at a few of those today and take a look at a lighter-hearted side of investing world today. We're going to take a look at Wall Street bets and look at some of the memes and have a little fun today with investing chaos. So let's take a look. If you guys don't know what Wall Street bets is, then you have been hiding under a rock for the last year and a half or so. This is a popular group here on Reddit, and there's a lot going on in it, but they have some really intelligent memes that are posted on here. This is one of my, this is one of the first one that just popped up today. Of course, it's Amber Heard, Johnny Depp. I would not pay any attention to this whatsoever, except there've been some fantastic memes come out of it. And then he said that Peloton's new CEO would turn things around. And then Johnny Depp's lawyer and Johnny Depp laughing at the acting abilities of Amber Heard, or maybe they're laughing at Peloton. Who knows here? And so let's move on here. Let's take a look at some of the things going on. So guys, I realize that there are a lot of new investors in this market. Probably more new investors than I've ever seen in a market before. And which means that you are, and now you're better connected than you ever have been before, and you're able to communicate with each other, which is amplifying some of the fear, uncertainty, and doubt that you have. Let me just tell you, folks, this is not my first rodeo. I've been through, a half a dozen, pullbacks or corrections, a couple of recessions, and I've been through a couple of threatened recessions where all the signs pointed towards a recession and it never happened. 2018 was one of the big ones, of course. That's when it really looked like we were going into recession. Also, what you don't realize is immediately before the pandemic in September, October, the bond market almost crashed in that time period, and things were looking pretty dire then, although you couldn't tell by looking at the stock market, right? So that is an episode that's probably forgotten, but the bond market in September, October of 2020 actually had to be backstopped by the Federal Reserve. So yeah, I'm going to be bouncing back and forth between my streaming software and what's going on here on Wall Street bets. But Catalan Divine says, ha, 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 we're doomed. Let's laugh at the doom today, because partly when you got into the market a couple of years ago, if you're a new investor, you absolutely were lied to. You were told there were going to be Lambos. There are no Lambos. By the way, that's Stephen Root, who's a fantastic actor. This is one of my favorite memes from today, buying the dip. Let's buy the dip. Buying the dip for the first time. Matthew McConaughey looking all suave. Down 25% after buying the dip. I'm sure we all feel that way. Buying the dip for the fifth time, down 90%. This is for all the SoFi investors out there, myself included. I look like this version of Matthew McConaughey today. In fact, I've actually lost a bunch of weight lately too. Surprisingly, I lost a bunch of weight by eating less and exercising more. It's weird how that works. And this is another good one. When you buy the dip, but the deep dip keeps dipping. I still haven't seen Squid Game, and I know I've been taking a look at Netflix's numbers recently, and the giant crap that Netflix has taken recently. They actually previewed this in the early part of January, stating that they kind of anticipated there was going to be some member outflow. They anticipated that there was going to be a little bit of a dip in revenues, and it was really all about their production cycle. When are their new series coming online? and how many of those are coming. And they're really just kind of in between in production cycles right now, and they're not looking for a lot of new stuff to come out until the end of this year, when we're likely to see a surge in in Netflix subscribership of games. So Kettle and Divide says, you need to see Squid Game, best show ever next to Game of Thrones. So let's talk about Game of Thrones here, and not just Game of Thrones as a business concept. So the thing that Netflix is doing, but not doing as well as Disney is they're not creating properties that have entire universes for you to create spinoff after spinoff after spinoff after spinoff. Like they kind of had that with the Marvel Netflix series. And when Disney bought Marvel, that put that all into jeopardy. Of course, those series were canceled. Some of them look like they're going to be revived. But this is a giant moneymaker. And this is one of the reasons you see so many sequels coming out, is they know that there's a built-in market for it, right? You guys know who Adam Sandler is. Adam Sandler is an actor who kind of does his own thing now. He produces all of his own movies. He's got his own production company. He hires all of his friends to do things because he knows he's got a built-in market. He's going to make X amount of millions of dollars on every movie he makes because he's got those fans behind them. So Disney does this, of course, in a much bigger way with properties like Star Wars and with Marvel Cinematic Universe. And I wish the DC Cinematic Universe would get off the ground and make something great, because the universe itself is actually it's pretty entertaining. It just has failed at the box office for a variety of reasons. But creating these properties like that, or buying these properties like that, is going to be a priority for almost every streaming service. I think it's CBS or NBC All Access that has a Star Trek right now. And I don't think people outside of the Trekker community kind of realize how much of a moneymaker that is. It doesn't matter if original fans like the series or not, they're still going to watch it. And they're still going to critique it. I know people that hate Discovery, Star Trek Discovery, have never missed an episode, and they have their subscription to CBS All Access just to watch all of the Star Trek shows. So that strategy is working, whether or not the property is even great or even resembles what was going on before. So, so let's take a look here. Roblox. In no universe is Roblox a $115 billion company. The entire business model is based on 8-year-olds begging their parents for money. Well, I haven't actually heard it put that way. The people who play that crap can't actually spend money on the game, even if they report more users. Uptake, it barely matters. The company still isn't profitable. Only people with less money than 8-year-olds is Wall Street Bets regular. The only people with less money than 8-year-olds are Wall Street Bets regulars. Oh, that is harsh. A slightly poor earnings report should cause. Let me see here. A slightly poor earnings report should cause a decent dip. This is definitely financial advice. I'm totally a financial advisor, and you should absolutely listen to everything you read on Wall Street Bets. There we go. Okay. So he says he took out his initial investment at 180% profit, but now I let it ride. So I don't generally respond to any of these things going on here. And, but I think it's entertaining to see what other people have to say about Roblox. I think Roblox is an extremely long-term bet. I was betting that it would stay in the 30s. I was wrong about that, and absolutely wrong about that. Live footage of me scrolling through all of the daily 52-week low notifications from Yahoo Finance for every stock on my watch list. Could be a good thing if you have cash sitting on the sidelines. May not be a great thing if you don't. So yeah, absolutely something that it depends on where you are. Here we go. Bear markets create strong memes. Strong memes create bull markets. Bull markets create bad memes, and bad memes create bear markets. Kind of a take on the whole toxic masculinity thing there with the strong men, good times theme. There we go. Okay, so this is interesting. And this is one of the things I wanted to cover here, is to take a look at all of the people that sort of openly post their losses on Wall Street Bets. Let me see here. Oh, I got a question here. That's a good one. David Papa, hello from Transylvania. Do you think that the real estate bubble will pop like in 2008? So in Transylvania, you're Romanian then. So do you actually live in the ancient province of, what was it, Wallachia, in that area where Vlad Dracul was from? I mean, just a question. But do I think it's going to pop? I do think it's going to pop, but not like in 2008. So right now, we still have a problem with zero inventory, even though it's going to get more expensive to buy and a large number of buyers are going to be pushed out of the market. The problem is still inventory. A lot of folks are sitting on mortgages now at 3% interest or 3.5% interest. Even if they want to sell, to kind of take the money out now, a lot of them don't have a ton of reason to do that right now. We're going to see a lag in inventories for quite some time. And that is because if I don't want to sell my house at 3.5% interest, a couple of years ago, I could have moved to a market like Texas or South Carolina and basically retired. But prices have gone up so much in those areas too, partially because of rising interest rates. I'm going to say low interest rates. Prices have gone up in those areas so far that, like, if I move to Austin or if I move to Charleston, South Carolina, there is virtually no difference now between the price I'm paying here in Southern California and what I would be paying there. So, and I would be paying a lot more interest on the new mortgage that I took out there if I was forced to take out a mortgage. Like, I could have gone there a few years ago and probably bought a place for cash and basically retired. Today, that's not really the case. Prices have gone up nationwide. I was looking at an apartment complex a couple of years ago in Huntsville, Alabama, of all places, and so Huntsville, Alabama, of all places, and the entire complex was something like $180,000 a few years ago, and now it's over $500,000, and that's only 3 years. So I do think that that we are going to see a lot of buyers priced out of the market here. The problem is we aren't going to see that corresponding element of greater inventory flood the market, at least not for a while. We are seeing a lot of building activity going on right now, which also has me worried that we could go from not having any inventory now to 3 years from now having tons of inventory and not enough buyers if we still have persistent inflation. So yeah, anyway, my thoughts are kind of confused on real estate. I expected that my home in particular, where I live, would have declined in value precipitously because interest rates on long-term mortgages are at 5.17% or something like that today. And I thought that would have been pretty interesting, but it hasn't dropped. Okay. So, so let me see here. Okay. So no, Wallachia is a province south of Romania. Okay. Excellent. Epic Cancer says, did I miss your comment on SoFi's earnings? Haven't made a comment on that yet. I'll get to that at some point. I'm sure we're going to see some SoFi memes here on Wall Street Bets. That's something that's every day here, but let's take a look at this. The last of my money, 62K to $388 in 16 months with screenshot of a single day 13K loss for the auto mods. Man, to go from $62,000 down to $388 in 16 months. I'm sure that was based on the YOLO style of betting and doing it based on what you read on Wall Street Bets. But $62,000, no matter what age you are, is not chump change, and losing it has to hurt. And I don't care if you have millions of dollars. I don't care if $62,000 is all you have. To go from $62,000 to $388, you literally lost more money than half the country earns in a single year. Look, you want to laugh about it? Laugh about it. Honestly, though, this is kind of sad. I hope this was a small part of this guy's wealth, and he was just taking some chances here. Okay, not going to read about that. Circle of life, hedge funds cut. We're not going to go into that. Okay, my portfolio in a nutshell. I'm not going to say we all know what this is, but a lot of folks know what this is here. All right. So this right here is probably Clover Health. That was the only thing that was up yesterday. And this is everything else that was a SPAC last year. Okay. So if you don't know what this means, then you're a much better person than the rest of us are. And I think this is a great meme. Here's what we know so far about what's going to happen with the economy for the rest of this year and next year. Here's what we know. Here's what all of the experts know as well. Nobody has a crystal ball. The history of making stock market and economic predictions is really the history of most people being wrong most of the time about most things. And your best bet is to remain rational, remain diversified, have a long-term plan, and stick with it, which is not the advice that you get from Wall Street Bets, of course. All right, we're on to SoFi here. This is a great meme. Honey, it's time to lose another 10% on SoFi. Buy the dip. Yeah, this is buy the dip. Yes, dear. Okay. I agree. This is everyone's portfolio today. Everyone's portfolio today is, or at least yesterday, was a giant bloodbath. But I think that this meme is, especially if you've been following my channel, I've been a huge fan of SoFi for quite some time. Trading was actually halted today on SoFi for, I'm not, it may have actually come back online. I haven't checked, but it was halted briefly. The stock crashed after earnings came out. And this is a little bit something like what happened with Upstart yesterday. Upstart's earnings were actually really good. In fact, they kind of hit it out of the ballpark. And guidance was a little bit weaker, but it wasn't all that weak, all things considered. SoFi is in kind of the same boat where they prepared you last month for reduced guidance. Their earnings actually looked pretty good, all things considered. And the guidance going forward looks pretty good going as well. There's this giant market overreaction to what we all should have expected anyway, which was to have decent growth in all sectors other than lending, which we saw. And the reason I got stopped though, or there was a trading halt, is that the earnings were accidentally released by Bloomberg early before market close, and that's why they halted trading, at least for a brief period. But yeah, so earnings actually look good. And let's look here. I got a comment that says desktop metal is being destroyed today. So I got to be honest with you. I've had 3D printers. I was one of the early folks who got burned on investing in 3D printing technologies, like back in the 2012 timeframe, 2013 timeframe. Got burned badly. In fact, I think that at one point I looked at the very top purchase of 3D, symbol DDD. It was like $93 a share or something. I was the top purchase for like 6 months before it bounced back above that level and all. But I bought pretty much at the high, rolled it all the way down to like $30 a share or something like that before I bailed on it at that point. But it was one of those things where I realized that I invested in that industry without knowing that much about it. The issue with 3D printing technology is I think it's just going to take a while for it to reach maturity. In the investing in almost anything right now is probably a little bit premature unless you are willing to sit on it and deal with the volatility for the next 10 years or so. And I do mean 10 years. 3D printing technology has really been around, at least in white paper form, since about 1983. It first gained prominence in about 2009, 2008, 2009. And basically has never reached maturity, even with printed circuit boards being a real thing now for prototyping. How many companies need prototyping, right? And I'm really talking about what went on with the Dragonfly printer last year. I can't remember the name of the company, but they made the Dragonfly printer, and that stock went crazy over speculation that Cathie Wood was looking to invest in it. And I was skeptical all along about that, kind of like I was skeptical about Palantir all along. And I don't want to say that I've been vindicated with my skepticism on Palantir, because a lot of what's happening to them right now is due to the macro environment and only somewhat due to their actual performance, right? Yeah, Nano Dimensions. Thank you, Laughing Man 83. Nano Dimensions was the company that I was thinking of. So when Nano Dimensions came out, they basically the only patent they had was on a dielectric ink. And the issue with having the patent on that type of ink is it's really easy to get around that patent. Not only that, it's really easy to get around a lot of patents today. There's an entire industry of engineers in China where all you do is you bring to them a project or something and you say, okay, this technology is patented. How do I make something that's different enough to where I can evade that patent? And this is actually something that started here in the United States, and that sort of idea moved to China a few years ago. I anticipate that at some point it'll probably move to India, where you have lots of really intelligent people and really creative people who aren't paid a lot, and you can take advantage of their expertise. So within a few months, Nano Dimension had 4 competitors that were making products. The Dragonfly printer was still the nicest looking printer out there, but they had 4 competitors being produced at a cheaper price point with their own patented dielectric ink. And that's one of the things that I didn't cover in my video because I didn't understand at the time that that's what was going to happen. But yeah, that is kind of what happened with them, is that their prospects look a lot dimmer when you've got 4 other competitors that make a product that's cheaper. And you realize how how limited is that market of people that need that for prototyping? Because you're not, with nano dimensions, you're not producing chips at scale, massive amounts of them at a cheaper price than traditional manufacturing methods at this point. The goal is that one day 3D printing or additive manufacturing that they call it will actually be cheaper than traditional manufacturing. I just don't know that that's the case. Bob Johnson says, what are your thoughts on buying Upstart at 30 versus SoFi at 5? Honestly, objectively, Upstart's a better buy than SoFi at 5, based on its profitability, right? It's a profitable company. Earnings per share right now looks pretty good. I looked at it this morning and it looked pretty good. But objectively, it's a better buy because of that. When you look at SoFi's diversified revenue streams, however, they look pretty good, especially going into the future. And so my issue with SoFi is my issue with a lot of companies is they lack a competitive advantage. And what they're trying to do is create a community, right? And this could be said about a lot of other companies and some of the most popular culty technology companies I can talk about out there. They don't really have a technological advantage over the people that they compete with. They're the companies they compete with, they have an advantage in terms of their company culture, meaning the dedication and the brand loyalty that people have, which is sometimes not based on technological superiority or availability of resources or anything. It's just because of brand loyalty and momentum, right? SoFi is basically trying to recreate that, and I think that they're running into the same issue that a lot of other fintechs do at this point. Is that if everyone can do everything, then what differentiates you? I think SoFi's focus on the particular market segment that they're going after is their competitive advantage. It is a high profit. They're sort of what they call their high net worth, not well served market. Actually has a lot of money and will end up having a lot more money, and establishing a relationship with folks like that in your self-contained ecosystem, having multiple points of contact, meaning they have more than one product, which is something they're actually really good at. Once you have one SoFi product, you end up having more and more and more SoFi products, right? And that makes that relationship very sticky and hard to leave. That's kind of the environment that they're trying to create right now, but everyone is trying to create that environment. And they're all doing it in different ways. And it's going to take time to see who emerges out of that. So I fully expect Upstart to start adding services like SoFi does, like Cash App. I fully expect they're going to start doing that at some point. They're going to have to diversify their revenues, especially because, when interest rates rise and we start to see that spread between lending rates and deposit rates, they're not going to look as good to folks who have sitting next to folks who have a bank charter once that happens, because of the additional fees that they put on things to custodian loans and things. So what do you think about Shift? So so anyway, Bob Johnson, Upstart right now, if you have a shorter time horizon, I think that it's a better bet. If you have a longer time horizon, I think SoFi is a much better bet. But if you're thinking to dispose of the stock under 4 years from now, I'm thinking that Upstart might be a pretty good thing show here. So Dave Papa says, what do you think about Shift? Actually, Shift came up in the Discord group in my Patreon chat a couple of times, and we discussed this a couple of times. And they're based out of Arizona, I believe, and I've seen some advertisements here where I live, just driving around. I think that a lot of these used car companies are going to start having some problems here relatively soon. That is not, and I don't believe that they have a competitive advantage over AutoNation or over. I just can't think of it. I used to live next to one of these like discount, no negotiation dealers. I just can't think of the name now. But I don't see that they have a giant advantage, and I've been looking at them for a while. This came up almost a year and a half ago in the Discord chat, and someone produced a pretty nice presentation on that, and I ended up not making an investment based on that discussion that we had around Shift. I'd be willing to reevaluate that, but I think when I looked at it at this time or a while ago, I'm fairly certain that the price was around like $8 a share or something. I don't know what it is now, but even then at $8 a share a year and a half ago, I don't think I was willing to put my hard-earned cash into that. And it's $1.24 today. Looking at shares, they're losing $2.13 per share. Their beta over the last their beta is only 0.74, so it's actually more stable than the market at this point. But let me see here. Let's look at 5-year. It's so low right now. It's really hard to say that it's really hard to say don't buy something that's that low right now. You can buy a lot for very little. They got a market cap of $102 million dollars, or 102 million. It's such a small company. It's very hard to evaluate. So Carvana is one of their other sort of their competitors there. They're at 37.82 per share today. Everything has dropped precipitously over the last couple of months. I think we all realize that. But let's take a look here at Carvana. They're announcing layoffs of 2,500 employees. Shares continue to crater. Look, that's not necessarily a bad thing. I don't know how old you guys are, but it used to be back in the 1990s, whenever a company laid off a bunch of employees, the stock actually went up because it reduced their largest expense. Not sure why my internet is so incredibly slow today, but it is. But this is another company that's losing money. It's a lot more volatile than the stock market is, with a beta of 2.29. Market cap of 6.72 billion though. Negative $4.18 per share. Let me see here. Over the last year, it has dropped like a rock from $360. You're down 90% on this stock. So this is not a company that I covered before, but you are down 90% on that stock. It just doesn't look good. Yeah. So we're all going to be we're all going to be having depression soup soon. This is from Wall Street Bets. So 1/3 ketchup, 2/3 boiling water, combine in mug, stir, and you have depression soup. Found a very sad recipe in my mom's old depression cookbook. So yeah, interesting. It's really interesting. If you look at, one of the great things that millennials have brought to the world, at least here in the US, has been better food. So much of my diet growing up was based off of recipes that were discovered or created during the Great Depression, and were really poor people food. And I didn't realize that at the time, but this is a diet that was based completely on poverty. When it's one of the reasons why Americans have weight issues, is because it was based on getting high volume and as many calories as possible, because we didn't always have that available. And it's hard for me to explain to someone under 30 today that I used to go to the grocery store when I was a kid, and there was only one type of lettuce, and there was only one type of tomato, and certain times a year. And that's it. You had iceberg lettuce. That's it. And then when they introduced romaine, and I remember when romaine lettuce was introduced to the grocery stores around where I lived, it was amazing. I thought it was absolutely amazing. In fact, I had romaine lettuce for the first time in a restaurant when I had a Caesar salad, which was a new invention back then. And so our diet was really, really limited even 30 or 40 years ago, based on what you could find in the grocery store. I know folks find that hard to believe now, but when you go to, organic section of your grocery store, you look at the immense variety that is there, that was really provided by this new generation of folks demanding better nutrition. So here, let me see here. Advertisements. If Biden is giving a speech the day before CPI numbers come out to calm the markets on inflation, does that mean that CPI numbers are going to be brutal tomorrow? Interesting question. CPI numbers, I predict, will be brutal. But I was in an industry meeting. What's today? Tuesday. Yesterday I was in an industry meeting, and it looks like there are a couple of signs that inflation is no longer accelerating. It's still high, but at least it's no longer accelerating at this point. All that is back on the table, though, if oil prices continue to rise, and I think they're going to continue to rise. I think that by the end of summer, if the war in Ukraine is still going on, that gasoline or oil at $150 a barrel is not out of the question. And it would only be a little bit above the all-time high where it was in 2008, when oil briefly hit $147 per barrel. So just another day, my stock's crashing with the market, my stock's rebounding with the market. We'll do the math, right? if you have a stock portfolio and you have $100,000 and your stock portfolio loses 50,000 or 50% or $50,000, and then the next day it gains 50%, well, you still have $75,000. You're not back up to $100,000. So do the math. You take a hard beating like that, it's going to take you a long time to recover, just based on how returns work. Yeah. So so time in the market versus timing greater than timing the market. How long have you been investing in the market? You must 7 years. You must be up huge then. Look at that poor cat. Look, I'm sure there's a lot of folks that started trading in the last couple of years or really went big in the stock market in 2020 when they saw a lot of opportunity. You're seeing a lot of opportunity now. And this meme is very powerful in a lot of ways, is that if you've been in the market for at least 7 years, you would be, even after the beating we had over the last 6 months or so, it's almost impossible that you're actually down on your portfolio over that 7-year period, simply because you were in the market the entire time, right? So, interesting. Posted 21 hours ago. We're not there yet. Comparing 2008 to 2022. I don't like to compare. I don't like to compare market crashes, because they're almost never the same thing. They're usually driven by the same concept, which is the overextension of credit to people. And that's definitely what happened in 2008. But we don't have the same systemic risks that we had in 2008 because of the different way that we actually price these securities. Okay. So things are quite a bit, and we're facing a much different threat than we were, and what we're really facing is persistent inflation here. So I don't like to make that comparison, but it is interesting to look at this chart and to realize I've been looking at charts for a very long time, and I can manipulate that to make that look like just about anything at this point. Meaning, if I took this slice right here, magnified it, and showed it over time, I could show that it's almost sort of the same thing. But if you're invested in the NASDAQ, then basically this is already 2008. You're already down 60%, right? So, yeah. So Mark T says, here, let me bring up, I got to go back over here. Mark T, Vroom is a better choice than Shift, the second biggest e-commerce, I guess, car seller after Carvana. They have $800 million in cash to survive. That's an interesting question, or that's interesting there. What is their burn rate when it comes to Vroom now? They're at $1.45 per share. They have $800 million in cash. Let me see here. I'm bringing up their stuff right here. And man, my computer is really slow whenever I've got a live stream going on. But yeah, so let's take a look at that real fast. And all right, so it looks like the Dow is down 110 points down. NASDAQ is up a little bit. Expect more volatility going forward, though. Whatever we see today, it's not over. We're going to see more of this. And my internet connection here is not cooperating, but I like to take a look at financials here. So we're looking at Vroom losing $2.71 per share. The 1-year target is about 931. Market cap, they're saying, is 250 million. This is still a really small company. Let's take a look here. 3 billion, losses to 390 million. The cash position would be really, really encouraging, and I hope that's true. That they have $800 million in cash or cash equivalents. I'll take cash equivalents and short-term investments as well. But yeah, that would be interesting if they actually do have that. And I don't know. Oh, okay. So it's not letting me look at financials today. All right. So total cost of revenue here. Let's look at balance sheet. Revenue, gross profit, operating expense, pre-tax income. That's the income statement. I want balance sheet. So let's take a look at how much cash they have on deposit here. Total assets 2.3 billion, liabilities 1.4, gross high on financial obligations, working capital is 1.2, invested capital, total debt. Yeah, they're looking pretty good at year's end in terms of investor equity here. In terms of working capital, they're looking pretty good, especially compared to what their burn rate is. And it looks like they have had. Let's take a look at their income statement here. I want to see narrowing losses here over the last couple of years if we can. We've seen an increase in working capital every year, which is good too. But yeah, so there's a lot going on with Vroom. That's not a company that I have followed very very much. I honestly just not. Probably it's just because of a lack of interest in that particular thing. So gross profit here. Okay, not bad at all. We're looking at operating expenses. Okay, so operating income. All right, that's to be expected with a growing company here. Pre-tax income. Okay, it's narrowing loss per share though. If we look at basic and diluted EPS, it's per share negative 2.6. Okay, that's okay. So they've got widening loss actually per share. Yes, I'd need to take a deeper dive on this to really get a better understanding of their numbers. But yeah, so not entirely uninteresting. Not entirely uninteresting at all. So thoughts on Joby Aviation. So I've had a couple people on it. This is the VTOL company that's producing the delivery drones. Am I correct about that? So yeah, let me so I've taken a look at them. I'm not a huge fan. I tell you what has actually kind of changed my mind on this. My big issue with delivery drones and has always been the amount of air that they move and the noise that they are using to move it. Right. I tell you, one of the things that's actually kind of changed my mind has actually been the commercial drones that are being used to drop tank munitions and mortar shells on Russian tanks in Ukraine. They are capable of doing it in a manner that is much quieter than I thought it would be. So I think it could end up being quite a bit more popular or feasible than I thought. Now, I don't want my neighbors to buy vertical takeoff and landing aircraft that they can drive to work every day. I don't want them moving that much air next to my house every morning. That will create a lot of noise. But delivery drones, if this is the company that I'm thinking of, could be really interesting. I think it could be really interesting. So, yeah, but I don't know about that company in particular, though. I definitely want to take a look at that. Right. Um, so help is, I'm sorry, I'm laughing at this, but help is available. Speaking of the National Suicide Prevention Lifeline, people getting margin calls today. It is not the end of the world. It's just money. I don't care if it's your entire life savings. It's just money. You can go out and make more in a lot of cases. But yeah, don't think about suicide, please. Don't. So Peloton reports big losses, offers weak guidance, and taps banks for a cash buffer. Now down 95% from its high. So Peloton was a stock that I never actually bought, never invested in. It always seemed like just a pure pandemic play when it first started getting really super popular. And I kind of figured, along with a lot of other people, that at some point that run was going to be over. And so I think that some of their business is going to persist and it's going to stick around. But Peloton, for the most part, was too much of a pure pandemic play for me. So Nikola Motors revolutionary battery pack exposed. Oh man, that's brutal. So actually, Nikola Motors has delivered their first couple of vehicles in Europe. Their first hydrogen fuel cell, battery electric, hybrid vehicles over there. I would love to see how they're actually working. I don't have any insight on that. I haven't gotten any reports. And to be honest with you, ever since I made my last video on them, where I was like, I'm not making any more videos on this joke of a company. I don't know if they're a zombie company going forward, if they have a real shot at success or not. It's really hard to find unbiased information on them at this point. So really, really tough. Getting the Dow Jones up. Teach your kids about GameStop and they will never have money to afford drugs. Albert Einstein. You know what? This is why you go on Wall Street bets. This is the kind of brilliant intelligence that you're looking for, is teach your kids about GameStop and they'll never have enough money to afford drugs. Not even GameStop, Peloton down 95% from the beginning. What was it? Sofi is down almost 80% from the beginning at this point. I've invested a lot of money in Sofi. Still though, we'll have to see what things look like going forward. All right, let's skip over this. So when you don't trust the green anymore, I'm colorblind. So yeah, I'm not sure what's going on here because I'm colorblind, but I can see that this is probably something about this is probably the market capitalization of the S&P 500, where it shows these companies taking up a vast majority of the market capitalization here. This is what it looks like to me. But yeah, I can't actually see the color, so you guys are gonna have to explain to me what's going on there at some point. The bear market keeps ruining my weekly shopping budget. Hello, Robin, my old friend. I'm buying the dips once again. Dang. Yeah, my weekly shopping budget is usually stocks that are on sale, and there are a lot of those right now. My only issue right now is I wish I had more money. Is the market going to continue to be volatile? Yes. Is it going to continue to decline from here? I don't know that. I don't have a crystal ball, but I do know that there are like Nvidia, for one, is reached eminently reasonable territory. It looks very cheap compared to its competitors, and I think it has significant advantages over its competitors. I wish I had more money to buy more Nvidia. Nvidia is one of those where I consistently tend to not have money when it's really when it's really a good time to buy that. So, Jason, can we talk about the stablecoin blow up with Terra? How will it impact the broader stablecoin market? All right, let's talk about that in general. What is a stablecoin supposed to be? Right, the stablecoin is supposed to be in the crypto world. It's kind of supposed to take the place of a money market fund in the rest of the financial world. Now, if you guys don't know what money market funds are, they are basically short-term investment funds that are backed by really super short-term securities, and they're supposed to keep their value pegged at a dollar, which means that essentially they have to keep a lot of dollars on hand, either in the form of short-term bond obligations like 3-month treasuries, commercial papers, 1-month CDs, whatever it is. They need to keep enough of that there to actually like back what they have, and then they pay like a nominal amount of interest on there, which is usually pretty close to the federal funds rate, like 0.25% or something like that. And right now those rates are going up, which means that some of those short-term securities are dipping in value. Now, I don't know exactly what happened with the stable coin blow up, but here's what happened the last time money market funds broke the buck, or it's called breaking the buck or breaking the dollar. The Federal Reserve actually stepped in to backstop the commercial paper market to make sure that those values, those asset prices remain stable, and that people still had faith in money market funds. That is not going to happen in stablecoin. There's not going to be a Federal Reserve to step in to do that. There's not going to be an FDIC to step in to do that. There will probably have to be either a consortium of other folks involved in the crypto world to do that, or it's going to you're just going to have to accept the loss. And somebody posted that in my Discord earlier today, talking about that, and I wanted to wait to talk about that on this live stream. You can compare it to money market funds breaking the buck. Now, we haven't had a giant, super large money market fund break the buck since I think 2008, and even in 2020 that didn't happen, and we aren't looking at that happening right now. Largely because there really hasn't been a commercial paper market, and almost everything is backed by the 3-month treasury. But there may not even be a giant shitstorm when it comes to stable coin blowing up, because it's not regulated. It's completely unregulated. So it had to be done sort of on the full faith and credit that stable coin was going to make the good faith effort to keep the value stable, and it hasn't been able to accomplish that. So yeah, I don't know what's going to happen, but I will say one thing: the backstops that are in place in the rest of the financial world are not in place for crypto. So that is very concerning. Okay, this is depressing. I just found out my friend killed herself, completely devastated during the COVID crash. I saw countless stories on various platforms of people ending their lives due to the stock market crashing. I just want to remind everyone that this pain that we're all feeling in the markets right now is just money. Actually, this is an important message. I'm gonna bring this up. Let's talk about this. And this writer goes on to say that I just want to remind everyone that this pain that we're feeling in markets right now is just money. This may not be the bottom, but markets will recover eventually. Your life is worth so much more than the negative dollar amount in your portfolio. I've dealt with pain, anxiety, and depression, so I know how it feels. Just keep moving forward. I think that's a very important message. It is just money, folks. It is I felt a little bit of that myself yesterday and today, waking up to see my account down, because I have a large amount of money in Tesla, what I consider to be a large amount for me. And I've gotten crushed because all all of the antics going on right now, I wish that Elon would not focus on Twitter and would focus more on Tesla and SpaceX and the Boring Company and whatever else he's doing. I will say one thing though, I have a pretty wildly different idea on, and this is really based on a comment that was made on my community page, but I have a pretty wildly different idea on why Elon Musk is interested in Twitter. And let's talk about what's going on with Twitter today. Elon will have no problem. Basically, Elon's going to have no problem whatsoever blowing up the Twitter deal and getting it at a lower price. Let's say he's basically, the deal's going to get repriced on negative earnings for Twitter right now. The fact that it's at $47.30 a share right now and there's a little bit of an arbitrage opportunity between this and the tender offer price at $54 and I think 20 cents per share or something. So there's a little bit of an arbitrage opportunity there. Don't jump on this right away. There's been a little bit of talk of repricing that offer based on the earnings that just came out, where you're seeing they have earnings of 28 cents per share here. I don't even know if that's the latest earnings, but I'm thinking that when earnings come out and it doesn't look so good, that offer may be redone. Elon Musk really kind of holds all the cards here. The board of directors accepted his tender offer unanimously at $54.30 a share, which I think was a 20 or 30% premium over the price. If he withdraws that offer today, the price of Twitter crashes precipitously. So I do not believe that he is interested in Twitter for free speech. Now, he clearly doesn't believe in free speech. If back in 2018, somebody criticized one of his events on a blog, or 2016, and he went on himself, personally canceled this blogger's order for Tesla. Meaning that he made him suffer the consequences of his free speech. And that's a lot of what Twitter has done, which is make you suffer the consequences of your own free speech. This is about data, folks. This is about the richest people on the planet arguing over who controls data, right? So we've seen a lot of this happen recently with folks who control large amounts of data and do nefarious or shady things with it being brought before Congress and being berated, right? We're looking at this happened to Zuckerberg, this happened to a couple of other people, but one of the people it didn't happen to is Peter Thiel. Peter Thiel was not dragged in front of Congress to have a very public conversation about his uses of data. And why is that? And it's because the company that he runs and they do shady things with data as well. Some of them I think are actually super cool, but they're still kind of shady. He was not brought in front of Congress because all of that is private, right? So I think Elon Musk wants Twitter's data about human behavior and human decision-making as part of his robot project. I honestly believe that, and I just can't think of the name of that robot project right now. What is it? Anyway, I just can't think of the name of the project, but I think he wants all of that data because of that. And not only that, he wants to open source the algorithm so everyone knows how the algorithm is working, but he wants to own the data in a private setting, and he wants access to all of that data. And I know people think that he would have access to all the data that he wants to, but I don't think that that's necessarily true. You look at Tesla. Tesla is a data company in a lot of respects, meaning that they have their hundreds of millions or billions of hours of driving data that they use for autonomous technologies. I think that they want Twitter data for autonomous technologies as well. And I think that this is what we're seeing right now is you're talking about Optimus. Sorry. Optimus is what I'm talking about. Thank you, Michael Will. And so I think that this is all about Optimus. I think it's all about who controls the data that goes into that platform. And I think it's all about a bunch of billionaires trying to decide how that data is controlled. That's probably not a very popular opinion. I don't think that this is about politics whatsoever. I don't think this is about free speech whatsoever. I think this is about people trying to argue about who controls data. Anyway, my opinion, I was kind of on the fence as far as whether or not this deal should be allowed. I'm against it as a Tesla shareholder because I think it's distracting Elon Musk from his deal being the CEO of Tesla. Now, if it really is for the Optimus project, or sorry, Michael Will says Optimus subprime. Yeah, Michael Will says Optimus subprime. If it really is for that, then hey, maybe I'm wrong about all that right now. But I think it could turn out to be a giant distraction, especially if he has to reprice the deal. And I think he's actually going to reprice the deal. I think he is. And everyone looking for an arbitrage opportunity right now is going to get screwed, because I think that deal is going to be for less than $54 a share. Somewhere in the upper 30s is where I think that next offer is going to come out. So, telephone 666-999 warn Ukraine needs to be peacefully concluded and China needs to stop having a zero COVID policy. But I understand why they do. Yeah, I understand why they did with the earlier variants, and maybe I'm having trouble comprehending the scale of the issue that they would have even with the newer, less virulent variants that are coming out, because it is an issue with scale, right? They have 1.2 billion people. We have 330 million people, and look at the chaos that it caused here. But yeah, so maybe they're having an issue understanding the scale there, but we can't ask them to sacrifice a part of their population for just because we're paying more money at the store. I know that's it's hard to understand that, and maybe that's not a popular statement either. But I think we need to let China have the policies that they need to have. I do think they're running the risk of civil insurrection at this point, like real issues, and that is the one thing that's brought down pretty much every Chinese government in history is peasant rebellion, and then where elites step in. But yeah, so market correction is due. Growth stocks are selling off, and given a year at most will check the charts when the correction happens. So charts are something that I don't pay a ton of attention to. Technical trading, when looked at through the sort of the objective scientific eye, doesn't work in the long term, and they can't really prove that it works in the short term. Like all of these buy signals are, that everyone's using computers to find. They're finding that those, and it's been known for 30 years or so that technical trading probably doesn't work in the age of high speed computer trading, in the age of instant response, in the age of people like moving their trading offices like 2 blocks over so they can get that extra billionth of a second advantage over everyone else, because light travels at 186,288 miles per second over fiber optic lines. In that age, they're finding out in particular that these strategies really don't work over a long period, and they're certainly not going to work for someone who doesn't have access to high-speed trading. But I don't think that the war in Ukraine is going to be peacefully concluded. And that's my biggest concern right now, is that somebody has to drag one of those parties out of office kicking and screaming. Bob Johnson, thank you for the super sticker. This is actually the first super sticker I've gotten in a while. I think you gave me the last one, but thank you so much, guys. Yep. So in the earnings call, Elon joked and laughably called it Optimus subprime. All right, so I didn't listen that far into the earnings call. I'm not the only one that finds humanoid-looking robots to be really creepy, though. I hope I'm not the only one that finds that. Put them together. This is a great meme, by the way. Let me see here. Bulls be like, yeah, hey, listen, can I have my job back? Here we go. Sometimes you're flush and sometimes you're bust. And when you're up, it's never as good as it seems. When you're down, you never think you'll be up again, but life goes on. Money isn't real, George. It doesn't matter. Fred Young. That's actually true in so many different ways, in so many different layers. We've talked about this before on my channel, that there's this huge psychological difference between being up 10% and being down 10%. You just get a lot less pleasure out of being down up 10% than you get pain being down 10%. And we look at like Catalan Divine here, down 66% on your portfolio. That's first of all, I'm sorry that happened, but I'm not surprised. If you're a technology investor, you are down hugely. And especially if you're invested looking 10, 15 years out in the future, you're taking quite a bit of risk there. Being down that much is, I would be down that much if 70% of my portfolio was not invested in really boring index funds. So yeah. And so I generally don't talk about politics, but I have been willing to talk about geopolitics pretty often. I think Putin will expand war once Finland announces application to NATO on May 12th. Um, yeah, I don't think that. I don't think that. I think that he's delusional. I don't think he's that delusional. I think that so. There are a couple of jobs that I wish that I had right now, and one of them is I wish that I had access to all the data that's being collected right now by all the people that work in military intelligence that are getting to see the performance of a lot of this new Russian equipment, modernized Russian equipment for the first time. There was a lot that we thought we knew about their capabilities. There was a lot that we thought we knew about the amount of material that they had, and it looks like that's a lot of that's been incorrect. Now we knew that for like their Su-57s that they only had a couple of those that were in operation, that the Armada, T-14 tank, they only had a couple of those in operation, and we knew that they had this great equipment, but they only had a few of them. What we didn't really know was what were the performance capabilities of some of their older equipment. If you think about it, whenever Western trained armies, with the exception of the Georgian War in 2008, whenever Western trained armies encountered a Soviet or Russian equipped force, the result was always overwhelmingly in favor of the Western trained or Western equipped or Western armed force. So, and it's not necessarily about poorly maintained equipment or equipment failures. They have an entirely different philosophy when it comes to the production of equipment. I'm actually, and you only have to look at the inner workings of the older style AK-47 to understand how brilliant their philosophy was. Where you make things without tight tolerances, you make things that can be used and abused, and even if they are poorly maintained, they'll at least barely function. In this case, though, we're seeing a military that was in far worse condition than we thought. And everyone says that, well, why didn't intelligence do their job? They did do their job, but they kind of took lessons from the Israeli experience in the 1974 October War, where they underestimated a Soviet-trained force. They underestimated the resolve of the people that they were going to fight, and they got their butts handed to them for the first 2 weeks of that war before they turned it around and were able to defeat the Egyptians and Syrians, right? But that's kind of and the experience after that with the Israelis is that they were never going to underestimate a threat again. It's far better to overestimate the threat that you face than underestimate the threat that you face and risk annihilation. I think that's been sort of the attitude that we've taken with with Russia, is that we've always overestimated their capabilities, and they're able to punch above their weight in certain areas. But here's the big thing that I'm surprised with. We've seen almost nothing on the cyber warfare front. Almost nothing. All of their vaunted cyber warfare capabilities that they threatened us with in the past, that they kind of tipped their hand and showed that they had, we've seen almost none of that. They haven't even really been successful in cyber warfare activities against Ukraine, which leads me to believe that other players out there are far more involved in the cyber war than is being publicized. So I think that's very, very interesting. I don't think that it gets resolved peacefully. I think it drags on for a very, very long time. And I think that it doesn't end until Putin is no longer in office, and he's going to have to be dragged out kicking and screaming. That is my political opinion for the day. Yeah. So I don't think he's not going to expand the war to Finland when they announce application to NATO on May 12th. That's a really long front to worry about. Here. Yeah. Can you talk about lockdowns in China? Lots of people clashing with police. Do you think that the closed loop factory life will sustain for the rest of the year and beyond? So, they're not going to do that. In fact, if you look at Shanghai's Gigafactory, they announced a shutdown that was due to supply chain concerns, that was due to shutdowns in other cities. So the shutdowns are not being handled in the same way by the same cities. I think that I don't see a solution for this in the short term. And it's a very different society than we are. I don't know how close they are to real issues with civil strife, but it seems like they are pretty close to that. But don't make the mistake of thinking that people revolting against their government want our help or want us to be involved in any way or anything like that. Yeah, I don't know what to think about this at this point. I am really cautious about my investments in China at this point, and yeah, I'm really cautious about that. I'm not buying any Xpeng right now. I'm not buying any Neo right now. I'm still sitting on Neo from my original purchase way back, like 3-4 months after they went public. Um, in terms of Xpeng, if things had recovered without the war going on and COVID had been pretty much over at that point, I think that Xpeng and Neo both would have done fairly well. Whatever my expectations were for them has been pushed out now almost over a year, I think. So, um, worried about Tesla quarter results from Shanghai impacting the 9 to 12-month stock price action. I am too, but let's remember that their shareholder meeting is going to be sometime in early August where they're going to vote on a split. And that vote is a foregone conclusion. Everyone's going to vote in favor of it. And that's going to buoy prices between now and August. There may be an opportunity there as well. And I definitely think there's an opportunity with Amazon. It's still $2,000 a share, but I think there's a giant possibility with Amazon. So um, Russian cyber warfare is intimidating threats on Twitter. It's more than that, and it's more than that. But I think a lot of folks were confusing opportunistic criminal elements with the actual capabilities of the government. But you are correct when you say that Russian cyber warfare is a lot of intimidating threats. It's not even intimidating threats on Twitter. It's just simply Russian bots who are given a script of ridiculous things to say. And they target certain demographics here in the U.S. and get them riled up and upset. There's an entire documentary that was done on this. I'm not the hugest fan of documentaries lately. There's a remember, there are a couple of different ways. If you have a real issue with the way something is done, you can take your evidence and go to court and win cases. But if your evidence isn't very good, you can just make a documentary about it, right? And some of you folks are going to know exactly what I'm talking about right now. But let me tell you, if you have good evidence that some giant crime is going on, then don't take it to a documentary. Take it to court and win cases on it, right? And this is kind of the thing when it came to like the whole Russian cyber warfare. You're right. A lot of times their cyber warfare was literally just putting people in comments on Facebook, putting commenters on Twitter. When I say these bots, they're not actual robots. They're people that are just paid to sit and type from a script in these giant buildings, office buildings in Russia. And that's what they're paid to do is push a narrative. This is a real thing. This is something that people really do. And they spend a couple $100,000 a year doing this. That's all they do. And they've been able to influence our elections. They've been able to create discontent all over the world, not just in the United States. They've done this in Estonian elections. They've done this in Ukrainian elections. And they've done this all over the world, right? And it's very low cost, very low cost. So very interesting what's going on in the world right now. The other thing that is good, though, about Tesla, about Elon Musk wanting to buy Twitter, which is authenticating all users to make sure that they're humans. I think that's very good too. But I think that ultimately the desire to do that is about getting really good data to model human interactions for the Optimus project. I don't think it's about stopping misinformation. I think it's because he wants really good data. And think about it from that perspective when it comes to this Twitter acquisition. There's no politics involved, in my opinion. There's no free speech issues involved, in my opinion. It's all about who gets to control that data. So, yeah. Anyway, happy to answer any questions that you guys might have. If not, I'm going to keep going through some Wall Street bets here. Yeah, if you're young, you should be dumping every dollar you can afford into the stock market. If you are 10 years or less from retirement, you should be excited about the upcoming potential recession or market correction. This happens from time to time. Actually, that's true in a lot of ways. I'm sort of retired right now, but I am, and this says first steps toward being a retard. Towards being a retard is this. If you're young, you should be dumping every stock market. Well, you should be dumping every dollar you have into some sort of asset, something that is going to appreciate in value over time. That could be real estate for you. That could be stocks. That could be other assets. Somebody's going to chime in and say crypto here for a second. Someone's going to sign in and say and say crypto here. Look, be very careful with crypto. It's still an immature asset class. It's just barely an asset class at this point. I would stay with the industry leaders right now, which I think are really Bitcoin, Ethereum, to a degree Solana, to a degree Algorand, and I would avoid everyone else at this point. We just don't know what's going to happen. But I'm back to doing what I was doing during the last crypto winter. Is just I set auto invest on $50 a month into Bitcoin, and I'm going to keep it there. And that worked out extremely well. I was able to convert some of that into cash last year, and I converted some of it into Algorand, and that has turned out to be a giant loss. But I think I bought most of it around like $1 to $1.30. So I'm down pretty significantly on this. So, Mark Zuckerberg was able to pass the CAPTCHA test when he was interviewed. Hey, for colorblind people like myself, sometimes those can be pretty hard to pass. Okay. But yeah, so that's the aim, right? If you have enough data about human decision making from Twitter, maybe you can produce bots that can pass those CAPTCHA tests, right? So maybe that's part of the ultimate aim, is producing an artificial intelligence that can fool humans. So a couple of years ago, and this is really like 4 years ago, some guy came to our office and showed us this online test where you got to read like 8 short articles and determine which one was written by an artificial intelligence and which one was written by a human. And I got 8 out of 8 correct in determining which one was a human and which was artificial intelligence. And I assumed that everyone else in my office had the same experience, and that I was wildly off base on that. And most people could not tell the difference between an article even 4 years ago that was written by AI and an article that was written by a human. And I assumed that the AI's brains were going to function more like mine, where they're obsessed with numbers and obsessed with statistics. And that's kind of what guided me and led my thinking on this. And I didn't necessarily realize that wasn't true, that other people didn't necessarily think like that. But yeah, if you are young, I think you should be dumping every dollar that you have now in this time period in some sort of asset that's going to appreciate over time. And I don't mean YOLOing everything into a single meme stock. I mean taking this opportunity right now to put together a portfolio that's going to weather a variety of conditions. All right. Let me see here. I'm not going to go over this. Wall Street bets prediction tournaments for May. Oh man, you guys want to see what others predicted? Let's see how this works. Let's see how this works here and see what others have predicted. Oh, that's a premium feature. Yeah, I'm not paying for premium Reddit. There's already enough trash on here. I love burning my own money, investing 430,000 all the time. Oh, dang. Full image. Let's see. Down 14,500. Oh, man. It's going to be brutal. Oh, well. Brutal. Down 97% all time. This has got to be options investing. Yeah. This is about options investing. So just remember, folks, 80% of options are going to expire absolutely worthless. They're going to absolutely worthless. So be someone who sells options if you're going to start there at least. Start there. Bruce says, goodbye. I haven't checked Unity software today, but I imagine just like with everything else technology, it's actually getting spanked. Let's see how bad it is. It's 48. Oh, dang, after hours, it's $33.29 a share. Hammered. Absolutely hammered. It is down 31. Oh, let's take a look at this. It is down 32% after hours. So, let's see here. Unity software. Not sure why it's down. Has it not posted its earnings yet? On May 10th, today's May 10th. Company expects first quarter revenues between 315 and 320 million. The Zacks consensus estimate is 320 million, indicating increase of 36.56% year over year. That's reported figure. Okay, that sounds pretty good, but that's actually a little bit of decrease in acceleration from previous quarters. All right. Yeah. So me see here. Factors like influence human rules are likely expected to benefit from robust demand for its software solutions from content creators, game developers, architects, automotive engineers, and filmmakers. Yeah, Unity software and the Unreal Engine produced by Epic Games, they're seeing a lot of non-gaming expansion into their software right now, which I think is going to be really important for growing their bottom line. Unity software is a growth story here. I don't know why it looks like they haven't released their earnings yet, or at least I can't see that they've released their earnings. But when they do, I'll take a look at that. And market is just reacting to everything. Everything. If you look at Upstart's earnings, they were actually super positive, and the stock crashed. If you look at SoFi's earnings release, even though it was pre-release, it was actually fairly positive, and the stock crashed. Yeah. So the animator says, I take it that you talked about SoFi. I must have missed some. It's going down like a sinker. Yeah, it is. Certainly not happy about that. So, hey, Jason, thanks for your help over the last 2 years. You were doing great work. Thank you so much, man. Thank you. I really appreciate that. Sometimes on YouTube, you don't get a lot of love, right? Especially when you do live streams. The comments that are blocked because of all the profanity and outright insults and racist crap on here. It doesn't come across, right? It's automatically blocked. But sometimes I go back and read those comments, and it's actually hilarious. The number of threats that I get is actually hilarious, and including people that know like where I live, what city I live in, and some of the businesses that I own. Occasionally, I get threats through YouTube, which I think is hilarious. You can just drop by my jiu-jitsu academy anytime you want. Yeah, anytime you want, man. Let's go. So, but the yeah, we'll keep looking at stuff like that. Any thoughts on Netflix or Disney price crashes? I definitely much prefer Disney over Netflix at this point, right? Definitely much prefer Disney over this, and a lot of that has to do with the properties that they own, and a lot of there's the Star Wars, universe and the Marvel Cinematic Universe. That's an income stream that they can milk and milk and milk over and over and over. Plus, they kind of have a lock on some of that children's some of that children's stuff. And Ozolens says, hold on. Elon's Ozolens. So you commented on I take it you've been a subscriber for quite some time, Elon's. And I'm curious about your name. Is that a Turkish name? That's all I want to know. I like to guess at those things. I hope you're not offended by that. I just like to guess at certain things. So, Elon says, you get threats for what? For anything, Elon. You're on the internet, you get threats. That's just what happens. It's and I think it's funny actually. I would never threaten somebody over the internet. I just would never do that, right? But I'm surprised that it happens as much as it does. Let me see here. Let's take a look at what's going on right now. So the NASDAQ is still up, looks like 114. The Dow is down 30. And let's see, Unity software down to $31 a share now after hours. Let me see here. Let's take a look at Disney. Disney, when I looked yesterday, was, whoops. Hold on just a second, guys. We'll be back up. Disney, when I looked yesterday, was at like $80 a share or something like that. Let's take a look here. But I realize that for a company that's been around forever, some people just can't get it. Some investors just cannot get excited about a company that's been around for over 100 years. But Disney at $107 per share, where earnings per share is $168. Price to earnings at roughly $64 a share, a little bit more volatile than the regular market. Market cap of $196 billion. But let's look at the properties that they own. Like every Marvel film is doing $1 billion in revenue at a minimum. Plus all the merchandising they can do and all the deals that they have for that. Star Wars as well, they own that property and all the merchandising, of course, with that. Like Walt Disney is doing just fine in terms of earnings. So we look at we look at their earnings here. You're not seeing that upward trend as much as I'd like. We're not seeing as much in the way of profits, but this honestly is kind of typical over how their earnings look year over year over year. You have to look at a longer time period to see that kind of line that goes upward when it comes to Disney. So, but I do think there's some opportunity here, but not exponential growth. I think you're looking at steady linear growth of, say 8% a year. And I think you're looking at that over a really long time period. When it comes to Netflix, I think that you probably could see quite a bit of snapback from them sometime next year when their newest slate of properties comes out. But right now, their P/E ratio looks really good at 16-13. It's a lot better than Disney's at this point. Some of this, like I said, is they warned us about back in January that this was going to happen, that they were going to have a gap between when some of their hottest properties came out and their newest series came out, and that there was going to be a decline in viewership. So they kind of tried to prepare this for us in January. The stock is down pretty significantly. It's 52 from its 52-week range. It was at $700 a share sometime over the last year, and now it's at $170 a share. Does that represent an opportunity when earnings per share is at $11 per share? Price earnings is only at 16-13. I think that represents a pretty good opportunity for a longer-term investor. If you think this is going to turn around tomorrow, I think you might be disappointed. I think any stock, if you're waiting for it to turn around tomorrow, you could end up fairly substantially disappointed. So let's take a look at Tesla and see what it's doing after hours. A lot of times that's not all that interesting. Let me see here. I don't know why my internet connection is not cooperating today. But take a look at Tesla. Tesla down $2.03 after hours, down 0.25%. Stocks end the day mixed. Tech and energy sector one of the biggest. Let's see. Tech stocks lose $1 trillion in value over 3 days. Holy crap. That's a lot, man. Yep. And this is the big story when it comes to Tesla is the fact that the China production grinds to a near halt again amid supply woes. So China production in April plunged 98% from March. So there's going to be a pretty severe near-term effect on their revenues. I think next quarter is not going to look all that well. So Elon says Latvian, grew up in the UK, now live in England. Okay, I would never have guessed that as a Latvian name. I actually had a good friend that I used to box with a long time ago. He was Latvian. I think his name was like Emont or something like that. But he is a good buddy of mine. He was a boxer, and now he's a lawyer up in Minnesota somewhere. So if you're watching, Monty, looking forward to seeing you at some point. So we're looking at IB Investors Business Daily here with all the advertisements. Is that let's see here. Shanghai in its 6th week of a shutdown, the report said. Let me see here. Tesla only produced 10,757 vehicles in April, selling 1,512 of them. That's a far cry from the 65,814 vehicles sold in March. Tesla, I wish it was a stop, did not export any. They didn't export any made in China Model 3s and Model Y cars in April. That is bad news. That is very bad news. And Tesla typically exports the bulk of its China-produced cars mainly to Europe in the first 2 months of the quarter, and had its strongest numbers has its strongest numbers in the 3rd month. So the company officially opened a plant just outside of Berlin, March 22nd, which eventually supplied much of the European market. Okay, that's encouraging. But it takes a while to ramp production. Remember, guys, all right, it takes a while to ramp production. So it's unlikely Tesla's 2nd quarter output will manage to build on its record-setting Q1 deliveries of 310,000 vehicles. FactSet now estimates that Tesla will deliver 299,000 vehicles in the quarter ending in June, with revisions likely to come again as supply shortages continue to hamper production. So remember, it's not just that they're producing cars in producing cars in China, rather. A lot of what they source to produce those cars is also made in China as well. Overall, passenger car sales in China dropped 36% year over year in April. That's a pretty big drop, while production fell 47%. China is a key market for automakers and is the world's largest. Warren Buffett-backed BYD, which is one of the stocks that I follow a lot. Not necessarily a stock that I follow a lot because I only own 100 shares, but it's definitely a company that I follow a lot. I find it enormously interesting. But they were a top seller in the overall market for April. They sold 105,000 units in April, 130% year over year surge. So BYD has factories all over China, not just in Shanghai. It may be also they make their own batteries. Also, they make a lot of their own chips. They're not able to supply all of their own chips, but they're able to supply a great deal of them. So it may be that they just got a better handle on supply issues at this point. And also, they're not only in Shanghai; they're all over China. They've probably been able to continue production in other cities that haven't been shut down at this point. So, yeah. Meanwhile, sales of battery electric and plug-in hybrids, which receive incentives, rose more than 50%. So we're seeing a 50% gain in electric vehicle sales in China over the last year. The CPCA reported sales of new energy vehicles, which is both hybrids and electric, rose 52.6% year over year in April to 293,000, meaning there are about 1 million vehicles sold, EVs sold in California last year. And there were 293,000 sold just in electric vehicles just sold in China last month. I think that's pretty amazing. So, because when you look at the number of people in China that can actually afford to buy one of these electric vehicles, I'm not sure what that is now. I need to do some recalculations on there, but it was still smaller than the domestic market here in the United States was as late as last year. I want to see if that's still true. So, yeah. Interesting, very interesting what's going on here. So yeah, so let me know what you guys want to talk about here. Let me see. How is Ford doing? So Anthony, that's a pretty interesting question. In fact, I had this conversation with a very surprised investor. Like back in 2020, I did a live stream with my buddy Ryan Gonzalez, and we predicted all the companies we thought were going to do well coming out of the pandemic. And one of those companies that I predicted was going to do well was Ford. And a lot of it didn't have to do, a lot of that had to do with the financial situation they were in going into the pandemic. They had plenty of cash and not a lot of debt, right? And not only that, they had committed to a few changes in their manufacturing processes, which were going to help their bottom line in terms of having a greater margin. So a lot of those plans that they had at the beginning of the pandemic have now been thrown out the window as they pivoted to electric. And I don't think people quite understand how hard their pivot to electric is. They realize that they are 3 or 4 years away from being able to deliver an electric F-150 that is just as good as any gasoline-powered, not just as good as any diesel-powered, but definitely just as good as any gasoline-powered F-150 that's out there for roughly the same cost with roughly the same capability with much higher margins. So this pivot is pretty hard. And yeah, so I think this is very interesting. This is very interesting what's happening with Ford. I think that they may end up surviving, and a couple of these other big automotive players will not. So, do your kids own any stocks? Yes, they do. I've set up accounts for them. I set up 529 accounts for them. I've also set up the UGMA accounts for them, or it's either UGMA or UTMA accounts in California. I forget which one it is. So they have their own stocks. I do the trading for them, which is very little. But I have already set up like paper trading accounts for them. And yeah, so I've set up paper trading accounts for them so they kind of trade on their own. My daughter is doing just fine in her paper trading account. My son is bemoaning the fact that he bought Tesla at $1,200 a share and now he's down. But yeah, so my son's only 12, my daughter's 14. But I've taught them about budgeting and about investing and about saving money at a very young age. That's one of the things that I didn't get a ton of when I was younger. My grandfather, who I admired very greatly, though, was very good with money and talked to me a little bit about investing, talked to me about credit, talked to me about saving, talked to me about how all of your relationships are improved with the people that you love when you don't have money problems. You don't have to be rich not to have money problems, right? So yeah, no, they don't own stocks outright, but they are. I do have accounts for them, custodial accounts for them. So. Do you still believe in Cathie Wood's compound annual growth projections for funds over the next 10 years? Wow. So, of course, those have been upset by this absolute crash that we've had now. Do I believe in her vision of disruptive innovation, or in the Clay Christensen vision of disruptive innovation? I would have to hedge that bet a little bit now. And I would take a look actually at disruptive innovation that's happened in the past, and does it really follow that pattern that she's talking about. But then again, she's not necessarily investing in the Clay Christensen pure sort of philosophy of disruptive innovation. Otherwise, she wouldn't be invested in Tesla, because that's not how Tesla did it. They didn't start from the bottom of that demographic and work their way up. They started off by selling Tesla vehicles to really wealthy gadget geeks who wanted to show basically what they had, right? And basically produced a high margin, really expensive vehicle as a way to fund building a less expensive vehicle that more people could afford, and they're working their way down the chain here. That's kind of the opposite of the way Clay Christensen actually described disruptive innovation. But do I believe in her vision of a technology-driven and innovation-driven world? Of course I do. Nothing that has happened about valuations in the stock market declining for the last 6 months has convinced me that we are not still in the middle of a technological revolution. We are. Who benefits from that ultimately is still a big question there. Like, I don't know if the companies that she picked are going to be the biggest beneficiaries of that, or if newer players are going to step in and be the biggest beneficiaries of that. So yeah, over the next 10 years, I would say I'm still pretty much a believer in that. I need to hedge that though. Like, she has made some short-term trades lately that don't make a ton of sense. I'm a long-term investor. I don't have the pressure of outflows that convince me that I have to do something to make investors think that I'm on the ball. I don't do that. I buy my own investments, and then I don't do much, right? Yeah, but little things like I've gotten absolutely crushed in Roblox at this point, and I still have to look at this as and absolutely crushed in Unity, absolutely crushed in Sofi. But these were always long-term investments. There was always the risk that I was buying them at a value that was a little too high. And, if there are external factors and macroeconomic factors that are affecting the valuations of these companies right now, but when you look at the actual numbers behind what they're producing, that all still looks very positive. What people are concerned with right now is macroeconomy. They're not really concerned. I mean, I'm sure people are somewhat concerned about these individual companies themselves, but Unity Software in particular being down the way it is down, like I see that as a pure buying opportunity. I'm a little bit more skeptical of Roblox, but Unity in particular, I am not. They're going to be an absolute monster in the next 10 years. And especially when you look at the adoption of non-gaming folks, people that are not involved in gaming that are using their software now. So this is the way, me forced to go back to work because I haven't reached the moon after a year of trading, and I think that a lot of people think about this, right? So you're bullish on NVIDIA. What about ASML as it's below the lowest analyst estimated value? Michael, I wouldn't pay any attention whatsoever to, so you're looking at price targets or like enterprise value as estimated by analysts. Those are two very different things. I would not pay attention to price targets. First of all, the meaning of what a price target isn't exactly the same for every price target you're getting. Meaning you'll just see on Yahoo, you'll see all these analysts and what their price target is. Their price target could mean that they think that stock is fully valued at whatever value they're predicting 12 months from now. Could be 18 months from now, could be 9 months from now. That could be the value that they think you should sell, not that it's fully valued, or it could be some other meaning. Like the meanings for those price targets are never the same. You have to really look and see what they mean by that, and realize that most of the time they're actually going to be wrong. That the value is going to be just different from what they're predicting. Okay, so but yeah, understanding what the target value is very different. Understanding what the enterprise value is very different from target value as well. I would say that almost every company out there right now that has real revenues and is growing revenues that you were interested in 6 months ago is still actually doing that. Most of those companies are actually still growing their revenues. They may have reduced forward guidance by 10, 15%. If you look at SoFi, they reduced their forward guidance from like $1.57 million to $1.47 million. So, $1 billion rather. So roughly like $100 million less because of the loans that they won't originate due to students refinancing, because they had planned on the student loan repayment moratorium expiring sometime in May. So now they've taken that expected revenue out for the rest of the year, and they're expecting that only to amount to about $100 billion, which still means that they're going to have like a 40% gain in revenues over the year and a narrowing loss. And of course, the market responds by the stock dropping by 60%, because they're not saying they're not going to grow. They're saying that they're going to grow at about a rate of about 9% less than they did last year, which is still which is insanity when you think about it. All right. So yeah. So Anthony Walker says the future is EV, but I do not want to buy Tesla or Chinese stock. Any good options? Yeah. Invest in the lithium ion battery supply chain. A good way to do that is to either buy the LIT ETF or the BATT ETF. That is LIT or BATT. Let me write that down here. LIT or BATT. You could do that. Or you could look at their holdings, because those are ETFs. So they have to publish their holdings every day. And if you go on the website, those are published every single day. And you get to see the full list of holdings on there, and you could see what they hold. Albemarle is a huge portion of LIT. It wasn't in BATT's portfolio the last time I looked at it. I prefer LIT over BATT. Both of these have relatively high expenses, though. They are considered, and they both kind of form their own index, and they rebalance quarterly. And just based on the fact that they only rebalance quarterly, I think that their management fees are a little bit high, but it's a good way to get a little bit of quality control and some diversification across a bunch of different stocks that are just related to how you produce lithium ion batteries, and how you produce those precursor chemicals, and how you mine those things out of the ground. So yeah, I think that's a good way. If the future is electric and you don't want to buy Tesla and you don't want to buy Chinese stocks, then invest in the battery chain. I think that is absolutely the best way to do that. And it's LIT or BITT. Or maybe charging companies. No, I wouldn't do that. And I've discussed this a couple of times. So charging companies are not going to like fail, but I think they're going to spectacularly underwhelm in terms of how much money they make, in terms of how much money they bring in. They're basically going to do not much better than utilities. And a lot of it has to do with there's absolutely zero special about about any charging technology that's out there, and there isn't a reason for it to be special. The infrastructure is all built. You're looking at charging companies are basically selling you glorified plugs. Every electrical component manufacturer on the planet is going to get involved in this. Everyone in the United States there are thousands of electrical component manufacturers here in the United States who have the capability of producing their own charging stations, and the competition is going to be so fierce that you're probably looking at like seriously destructive competition. If you see someone breaking ahead in terms of the charging company, it's not going to be about selling power, and it's not going to be about the hardware needed to charge your cars. It's going to be some sort of innovation that ties networks together. It's going to be some sort of innovation that makes it less expensive or more convenient for people to charge. But man, you have the city of San Diego right now talking about making all parking meters, be level 1 chargers, meaning that no matter where you park in San Diego, you can charge in your you can plug in your car for basically for free, right? And it's the people using the parking who are actually going to be paying for charging as well. And so it's pretty interesting. I think that almost every utility is going to get involved in the charging game. I think that private companies are going to abound getting in the charging game. I think it's going to be a low margin, hugely competitive environment to be in. And so I think that investing in the battery supply chain is probably like there are going to be some obscure chemical makers that are going to do really, really well. Like companies that we don't think of that maybe make, or something involved in the battery management process, like a cooling fluid or something like that, that they're going to do exceptionally well in this time period. And it may not be somebody that you expect. So LIT has Gangfang and another number of other Chinese companies. So there is not a way to, if you're going to own a large portion of the lithium supply chain, there's not a way to get away from owning some Chinese companies at this point. That just isn't. there isn't a way to, or at least presently, to avoid being invested in some politically objectionable places as well, where cobalt is mined or manganese is mined or something like that. Like cobalt is mostly taken out of the Congo in really horrific conditions for these miners, and if you have a battery that uses cobalt and it's in its cathode, then you are participating in that, right? But yeah, so there's a couple of different ways to think about that going forward. So tech stocks lose $1 trillion in value over 3 days. Tech's mega stocks have shed more than $1 trillion in value just over 3 trading days since the Fed announces rate hike last Wednesday. Yeah, I'm not sure it's all about the rate hike. Um, I think that the half a point rate hike was baked in a long time ago. The Fed needed to send a signal that they were going to be very hawkish on inflation. I made this point in a post on my community page, and I talked about this in my Patreon group. The Fed does not have a mandate to save the stock market. The Fed's mandate is full employment, is price stability, and controlling inflation. And price stability and controlling inflation are really the same thing. So it's really inflation and full employment. So they don't. I'm not saying they don't care about the stock market, but they are perfectly willing to sacrifice the economy and the stock market to get a hold on inflation. And if you looked at my 2 live streams ago when I went on this long diatribe about inflation, where I talked about Paul Volcker and the giant titanium balls that man had to jack short-term interest rates to 21.5% to crash the economy, to give us on a platter 10% unemployment in order to execute on an idea that we weren't even sure was going to work, as far as bringing money back from overseas, exchanging essentially inflation for high debt load. And that is what ended up saving the economy, at least temporarily. I don't know that anyone has the political courage to do something like that today. I really don't. I don't know that if Jerome Powell is the hero that we need in this time period. I don't think he has to be, though. He's able to act a lot sooner and a lot more decisively. So Sofi, this is when it was paused down at $4.86 a share. That's when it paused today. Man, I about had a heart attack when I saw that. About had a heart attack when I say that. So Charles Bear says GGPI. Let's take a look at that right now. Let me see here. Let's take a look at that right now. So Gora's Guggenheim Inc. Is that what you're talking about? Gora's Guggenheim Inc. Let's take a look at what we're Gora's Guggenheim still is a potential buy despite potential game changer for Polestar. This is the Polestar SPAC, right? Yeah, I'm going to hold off saying anything about that, and here's why. Number one, every single SPAC got actually was spectacularly failed. If you're only looking at last year, they're all down, almost every single one of them. If they're going with Polestar, I need to be convinced that Polestar is really going to do. It really has the promise that we think that it does, and I'm still not convinced that even Polestar does. I am encouraged by the fact that it looks like Hertz is buying a giant amount of Polestar vehicles for their fleet, but I think that it's speculation at this point. Just like me telling folks to go out and buy IPOE before SoFi went public would have been a mistake. I didn't actually recommend that, but I think that recommending that people go out and buy these SPACs ahead of time, especially in this environment, it's probably not responsible. And this is and we don't know a lot. I need to take a look at the investor deck for Polestar before I say anything. So, and we see here. So let's take a look here. Do you think CPI will come lower tomorrow? No, it's not going to come out lower tomorrow. Yeah. So, nope, it is not going to. And I don't say there's zero chance of that. What I want to see is that the R squared, or the what's called the rate of acceleration, is actually declining. I would be happy with that. It was already declining a little bit back in February when we first got really concerned, when I first got really concerned about inflation. But it's going to spike on energy prices, and it doesn't matter if the supply chain is normalizing. An energy shock is still going to cause more inflation at this point, and we are looking at an energy shock. I don't think there's a way around that. Interest rates can only help to a certain degree. Okay. Michael Will says, I'm not sure if it's good news, but I'm not sure if it's good news, but SoFi is 532 after market. Yeah, I think it was just a panic. I think people need time with Upstart as well. I expect that Upstart's going to see a pretty large bounce here. Probably not back to where it was, $77 a share, 2 days ago, but it's probably going to see a pretty large bounce over the next couple of days as people digest the news and they realize that it's really not that bad. That predicting that you're going to earn 10% less than you told us you were going to earn at the beginning of the year and still grow your revenues by 40% year over year, that is not terrible. Okay. That's not terrible at all. All right. So I think this is a giant, massive overreaction. So Nick Jason says, when is XBET production going to ramp up? All right. So there's there's very little possibility that XBONG's production can actually exceed 22 to 24,000 units per month before the end of the year. Right. Very, very little possibility of that because they have a factory opening up possibly at the end of the year. That's the target. Right. And then they have another factory opening up either at the end of first quarter, beginning of second quarter in 2023, which should bring their total capacity somewhere north of 200,000 units per year. And I know that they're already looking for a third location. I can't remember the name of the city. It starts with a C and it was hard for me to pronounce. But yeah. So, so it says I think I need XBONG to go up. Everyone needs XBONG to go up. If you're trapped behind the 8 ball when it comes to XBONG, I'm trapped behind the 8 ball here too. I did sell some options on XBONG kind of right before the dip here, and I sold them out longer term. Like I want to say it was July 17th at 29 that I sold, and just use that to buy more stock and some other things. So, yeah. So what do you expect to be the world's next reserve currency and when and by when? So I am not obsessed with the dollar losing its status as reserve currency, and for a couple of different reasons. That may actually end up causing a reshoring of a lot of manufacturing into the United States because look at what's happening right now. Our currency is actually strengthening overseas right now. Even with everything going on with inflation here, it's making our exports more expensive and it's making imports a lot more expensive here. Not being a reserve currency, if we're not using so much oil, really doesn't look so bad. If we can cut our oil consumption in half because most of transportation has gone battery electric and we're no longer a reserve currency, it means that people traveling overseas like tourists, things are going to be more expensive. But it also means that our exports are going to be a lot less expensive for folks to buy. And we may see a resurgence of international trade, people buying our products and our services. So I'm not one of those people that says we have to have the world's strongest currency. We definitely don't. It's great if you're going on vacation. I'm going on vacation somewhere foreign this summer. I don't know where, but I looked at the Japanese yen and it's at a low that we haven't seen for decades and decades, right? Which is great for for everyone that I know going to Japan this summer, but not great if we want to sell products there. It's very expensive. So I am looking at probably, the Chinese yuan becoming one of the next reserve currencies, and China does not necessarily want that to happen because they're going to be stuck in the same trap that we are, where you have to constantly devalue your currency by 2 or 3% every year in order to prevent your exports from getting so expensive for all these emerging markets that are out there. And also, the other thing we don't want to do is have people peg their currency to the US dollar again. That was really bad for the US dollar the first time around, from 1930s to the 1970s. I don't want that to start happening again. So I don't know when we're going to see that next reserve currency emerge. You could really see that the US dollar and the euro are the only two real reserve currencies that are out there right now. And the British pound. Those are the only real reserve currencies that are out there. But I do think you'll probably see the British yuan, the Chinese yuan, or renminbi, whatever you want to call it, is going to become the next one. So if you don't consider it already, I don't know. Let me see here. Abir says Tesla is a perfect stock for a recession. Do you agree? I don't think that there is a perfect stock for a recession. I do think that Tesla has a very good chance, particularly because of the demographic of people that can afford to buy Tesla. I do think that it is a stock that could still do very, very well in a recession, because even, put it this way, if we go through a recession, I won't buy a Tesla just because I'm a cheap bastard. But if I wanted to buy a Tesla during a recession, I could still afford to buy one. And a lot of folks in my financial situation or in my demographic are kind of the same way. But where you're knocking people out is on the low end, right? People whose earnings are really going to be affected by the slightest disruption in labor markets, which we're not seeing any of that right now, folks, by the way. We're not seeing any of that. We're seeing wage inflation. We're seeing darn near full employment. And that's one of the really great things. And so we are looking at more of a mechanism leading us into stagflation, although it's way too early to talk about that, where we see we see high employment numbers, we see high inflation, and we see a bit of economic stagnation. But it's only been 2 quarters, guys, right? Or 1.5 quarters, really, of bad economic news. You need 2 or 3 years of economic news like the 1970s before you start talking about stagflation. I have had a number of people ask me about this, and I got to tell you, it's just way too early for that. So what do you have your eyes on? Number one thing I have eyes on right now is that lithium battery supply chain, and I haven't figured out. I own some LIT, and I haven't figured out exactly what other investments I want to make right now. Albemarle is probably one of those, though, and Nvidia is another one. And honestly, between like Albemarle, Nvidia, Tesla, you've got pretty much everything that Cathie Wood talks about all wrapped up just in those 3 stocks. Okay, and it's a lot of that has to do with Nvidia and how many different markets that they're playing in, and a lot of you aren't even aware of everything they're doing that's being used by the genomic space or the medical community, because I haven't made a video on that yet, and no one else is making a video on that angle. I keep trying to do it, keep doing the research, and then every time I do it, I got to get rid of it because everything has changed. So Michael Will has actually, this is the perfect recession stock. Costco for a recession. Dollar General or Ross Dress for Less, also the perfect stocks for a recession. Okay. And there's like any dollar store stock, TJ Maxx, would see those are great recession stocks. It's absolutely great recession stocks. Also great inflation stocks too. So the folks know that, or folks believe that the things that Ross or TJ Maxx has are leftover materials that were produced for other companies, and then that other company couldn't sell them, so they sent them to TJ Maxx. That's actually not true. Those are extremely cheap knockoffs of things that are popular at more expensive companies made with cheaper materials, sold under that brand name for TJ Maxx, produced for TJ Maxx. I've talked to a number of industry insiders that are well aware that this is what is happening. This is sort of an open secret in that industry that TJ Maxx, Kohl's, and Ross Dress for Less, they're not really doing what you think they're doing. They're not selling you things that have mistakes in them or oopsies or whatever. These are actually things that are specially produced for them. But yeah, so what do you think about NFTs? Any worth the hype? Well, I don't think any of the NFTs that are out there right now are worth the hype. The whole, what the heck? All right, man. I don't know why that wasn't caught by my filters, but I just got comment bombed by someone advertising Tinder X.xy. I'm gonna block this person. Yep. All right. Just got blocked by an adult dating site. Thought all sites were adult dating sites. I don't know. But yeah, Costco for a recession is probably one of the better ones. But let's talk about NFTs. So we don't know what's going to happen with NFTs, and I think it could end up being very, very interesting. I think it could end up being very interesting in the gaming world, because you can do something. You can do something with NFTs that you weren't able to do before, and that's to create scarcity in that digital world. You can create something that can't be duplicated. Now, I don't think that selling a JPEG as an NFT is ultimately where the value of NFT is going to be realized. I think it's going to be in creating scarcity in different environments, right? Where you can basically, I think that when you buy concert tickets online in the future, you're actually going to be buying NFTs, right? Something, and which is going to eliminate scalping in a lot of ways, and is going to eliminate resale in a lot of ways too. And it's going to be very different, very good for people that are like selling tickets to things, right? That's a really bad example of that, but you understand what I'm saying here. You're selling an item that's unique. You're selling an item that you don't want duplicated, and an item that you don't want changing hands without certain rules being satisfied. So, Katarina, ik kan in klein beetje Nederlands spreken. Ik heb in België gewoond. What difference will the switch to ISO 222 make in November of this year? So okay. So what difference in terms of prices will that mean? That remains to be seen. A lot remains to be seen when it comes to crypto. I will say one thing right now. If you're going to be investing in any coins right now, you want to be looking at things that are compliant with the ISO 222 standards. Okay. And I don't have the knowledge I need to go into that right now in this live stream. I need to do more research, but that standard is you already have a lot of companies or a lot of blockchains that are compliant with that standard. And I think that the ones that aren't compliant with that standard are the ones that are going to suffer here in the future. Anthony Walker says, my eyes are on Google and Amazon. I absolutely want them. I got to say that it can't hurt at this point, really. Google and Amazon are both buys at this point, I think. And I think they've gotten unjustifiably beat up by the market. So Insever says, what's up with Unity? What do you think of earnings and outlook? So earnings came out after I started this live stream. I just saw earlier that Unity actually took a dump right afterwards. I will say that the earnings reports where companies have had real negative reactions to their earnings, the actual earnings themselves have not been terribly disappointing. But it looks like Roblox and Unity just released earnings. And Roblox stock plunged 38% on weak guidance. So it's not about their earnings; it's about what's going on in the first quarter. And I'm taking a look at this for the first time, like you guys are. So this is kind of my live reaction. Unity software stock plunges 38% on weak revenue guidance. Let's give my slow ass connection a little bit of time to catch up here. And Unity Inc. stock plummeted 38% extended trading Tuesday after the software company first quarter results that were largely in line with Wall Street analyst forecasts, but issued poor second quarter and fiscal year revenue guidance. So Unity reported a net loss of $177.6 million or 60 cents per share. Compared that with a net loss of $107.5 million or 39 cents per share a year ago. That is completely in line with analyst expectations. So adjusted earnings were also a loss of 8 cents per share. Revenue increased 36% to $32.1 million for the quarter, up from $234.8 million a year ago. Analysts surveyed by Facts said they expect an average loss of 8 cents on the share, which is exactly meeting expectations. Revenue of $321 million, so they missed it by 900,000, which is basically not a miss. However, Unity said it expected Q2 revenue to be between 290 and 295 million, which analysts had anticipated 360 million. So that's significant. Okay, that's roughly 15% less going forward than analysts had expected. For the full year, they're projecting 135 billion to 143 billion in revenues, and analysts polled by FactSet predicted 1.5 billion. So once again, you're looking at it's somewhere less than 15% reduction in what Unity is projecting they're going to make, and companies usually come in kind of close to this, and the market is vastly overreacting by declining by 38% after the stock is already down something like 66% for the year. So I think that this is a particularly good opportunity to pick up some shares for Unity. Unity, like Sofi in a lot of ways, is absolutely a growth story. They're seeing a lot of growth outside of gaming. Roblox, on the other hand, I'm a little bit less certain of. Yeah, I'm a little bit less certain of Roblox on the other hand. Let me see here. What's going on? Let me see here. Ripple versus Ripple versus SDKs is crucial when it comes to ISO 2020. Yeah, XRP, Algo, and yeah, they're all set up. Um, yeah, so it remains to be seen on that. I don't think I'd make any giant moves in crypto right now. Uh, Crypto winter, I think, is going to last for quite some time here. The last time it was a crypto winter, I just set my investments on auto invest and didn't think about them for about a year, and that was kind of the right call. Uh, I would be looking at projects right now, evaluating projects right now based on how much actual software development is being done on them, and the leaders are still the same to me. It's going to be Bitcoin, it's going to be Ethereum, it's going to be Solana, it's going to be Algorand, and maybe a couple of others. And notice I didn't say there's a big name out there that I didn't use, and that is because there's no actual software being done on that network. So it's they've done a really great job of promoting the coin, and but there is no one actually developing applications for that network. So yeah, very interesting. Yes. See, Charles Burr says, yes, I agree. NFT and blockchains will have lots of different RL applications soon-ish. Yeah, blockchain, NFTs and blockchain are gonna have lots of different real life applications soon. So one of the things I'm going to try and do when I travel this summer, because I'm going to be going to South America for a bit, I think. I don't know exactly where I'm going yet, but I'm going to try using my Bitcoin wallet in a couple of places where they're supposed to accept Bitcoin. I just want to see how easy it is to actually do. So I'm actually pretty excited to do that. So pretty excited to do that. Anyway, folks, I've been on for almost 2 hours now. Went over a little bit of Wall Street bets today, had a little bit of fun, taking a look at things, different memes and all that. Yeah, let me get this straight. You think GME down 30% is funny? I do, and I'm tired of pretending it's not. I don't know if I think it's funny, but it's completely expected. What value does GameStop actually have as an enterprise? Very little. It has a lot of value as a meme, though. I can tell you that much. Okay, so let's call this a day today. I want to thank everyone for watching, and I'm going to do this again at some point. Go through Wall Street bets, go through losses people have done, take a little lighthearted look at what's going on in the markets today. Take a live look at earnings. Like I was not expecting to take a live look at earnings today, so some of you guys kind of caught me off guard a little bit there. But yeah, love to see you guys again. Thank you. I'm going to try and do these a little bit more regularly. Have a nice day, folks.